All right, everyone, welcome back for another episode of This Week in Charts via Carnival Trades and Wall Street for Main Street. If you've not done so already, please give the video a thumbs up. Don't forget to like, comment, subscribe to the channel. Come find Jason on Patreon and come find me on carnivaltrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week. So the markets here, with a relatively quiet week for the most part. We had a very shortened week. We had a little gap up Monday, and then kind of just a minor pullback in the middle of the week, and a little bit more of a dip on Friday. Now, there was options expiration for the month of June. That is a quarterly, so we had a lot of pinning effects, and we still have a little bit of that going on into the end of the month here as we get to closer to end of quarter. But obviously, the news here is has kind of updated as of late. And today, really, what is starting to come in here is the odds of the Iran parliament. Well, they have actually approved. It's not even the odds, but they have approved now the closing of the Hormuz Strait, which could really spike energy prices. Obviously, with the bombings last night, so it does appear that there is some escalation going on right now. So last week, we're just going to call that some noise right now, and really moving forward, there are some levels that we're going to look at here in a minute, but I'll just flip over really to Bitcoin here because that's really the best thing we have on the weekends. There's weekend Wall Street, but it's a really thin market that's not traded, not really that accurate. But Bitcoin, it has some liquidity at least. And we are coming into a local double bottom right now, and we're actually kind of piercing that. You can see this is where the news, so we actually, the bombing news came out around, this time last night. I think it was like 8 or 9 o'clock. And, it actually kind of rallied off the lows. But since the news of them possibly closing down the strait, we've had a pretty good sell here. And we're basically testing that 100K handle right now. So we'll see where this opens. There's definitely some support around 97, 96 with those moving averages there. We'll see if it even gets there. And we still have quite a bit of time. I'm doing this video on Sunday morning, so there's quite a bit of time before we have the futures open for Globex. The positive here for the market right now is that this is happening now as opposed to, say, 4 p.m. today. So there is a little bit of a chance for the market to price it in, at least to a degree. But it does appear that is going to, rock energy prices here, and obviously, potentially cut off oil supply. So that's something that will be a factor for the market. And some of the things we've been looking at here, I've been looking at lately, last week we had the largest inflow in energy stocks since October 2023. And this is as of last week as well, but, or at least the prior week. But on a longer term basis, fund managers are very heavily underweight energy stocks. And I've talked about this, quite a bit, specifically with like the OIH here. I said, at some point, maybe it's just so hated that it starts to squeeze. I'm very interested to see where these open up tomorrow. But XLE finally closing the week above the 200-day. So for the first time since looks like March, right before that huge dump, the Liberation Day dump. And XLE was like on the verge of a breakout before that happened, and it has finally come back. So XLE here in a very nice position. And XOP as well, that has come back very nicely. So these energy stocks here, and even without war, I think they're just, you can see by the last chart, even without war, they're just very underweight right now. And I think that risk does need to be repriced, again, regardless if there's escalation or not. But oil prices here, again, kind of coming up into that big 76 handle. Again, I don't know where they're going to open here, but I'm just going to say 82. Because again, 82 to 85 is going to be your next big level there if we continue to push higher. I don't know how much higher they're going to go. You got to imagine that some of this risk premium is baked into the cake a little bit, just from the simple fact of these things are, they have been a risk for the last couple of weeks. So the market is, it does have that into consideration, but you're obviously going to see some sort of a gap up in energy prices going into Globex tonight. Gasoline futures as well. Big level there for RB at 250 and then you've got the 270, 275 area. So we're looking at, I mean, I don't know if gas is going to go up that much. Maybe, it depends. And if it does come down really sharply, then, perhaps that indicates the market's expecting some sort of walk back or de-escalation. But nonetheless, very eventful summer so far. We're not 6 months into the Trump presidency, and here we are getting involved in a major conflict here. But as for the S&P right now, I'm just going to say, seasonally, we're looking for some sort of a pullback into the end of June anyway. That's kind of how it works. That said, war is typically not that bearish for stocks. In fact, it's actually been quite bullish. In fact, I believe that Israeli stock exchange rallied very, right after the bombings here. So it's not, and again, the reason for that is war means liquidity, war means spending, and markets love that. Markets love that. It also typically involves a more dovish Fed chair. So when Powell will be speaking on Tuesday, by the way, for the House Services Financials Committee. So, these are things that the market does need to factor in. We also have something else going on that nobody even is thinking about or really talking about, but we have a major liquidity program coming from the Treasury, which is the SLR adjustment. And that is effectively the Treasury's way of doing QE. And people don't understand right now that the Fed really is secondary. We're under fiscal dominance. And the market doesn't need the Fed in order to have liquidity. They can get that from the Treasury. I believe the Treasury just did one of the largest buybacks recently as well. So there is liquidity coming into this market, and I don't think war is going to change that. That said, right now in the near term, 5,900 is going to be a whole round number that the market may want to test. But really 58 with that 200 MA right in that vicinity. You have the 100 and the 50 MA just below, but right in this area, I think it's critical for the market to hold that on a weekly close. I would not want to see us lose this breakup bar low here on a weekly close. That would indicate that we could see some more downside. So inside of this area here, to me, this is all just noise. It's all just digestion after the massive move up from the spring. And I still think this market, personally, I still think this market will try to challenge all-time highs at some point in July, or maybe, right after, end of quarter. There's a lot of pinning effects that go on in end of quarter that can hold the market kind of down or sideways. But I would say right now, as long as we're holding 5,800, I think this market can hang on here and digest this move again. Also, again, like I said, the fact that it's coming out, the fact that we had this happen last night, Saturday night, and we're having this happen Sunday morning will help the market. But we'll see what happens here with those levels. Watch that 100K handle on Bitcoin, and 5,900 again in the short term is just kind of a near term whole round number, but the 5,800 handle really is the big level for the market to hold for the triple Qs here. Again, there's a little bit of I would say 520 is going to be kind of the equivalent of 5,800 for the triple Qs, and then really that 510 area, and then you've even got all the way down to 500 for that 200 moving average. So again, this is still a market that, so close to all-time highs, by the way. I think as long as we're not losing this big breakup bar here on any of these major indices, you see the IWM there, or even the diamond, I think this market can digest this and load up into the summer, assuming that liquidity keeps coming, which it doesn't appear to be stopping anytime soon. So just keep those things in mind here, but we'll watch energy prices, we'll watch oil. Certainly can put pressure on the real economy. Just because you don't drive a lot doesn't mean that higher gas prices won't affect everything else in your life. But for financial markets, liquidity is the name of the game. So we'll see if that continues here. Also looking at gold, again, a little bit of a breakout of this kind of flag pattern, and it is, building a base up here. So again, I'd like to see a little bit more consolidation, but right now this has been strong into end of quarter, and again, the market likes this. I'm also interested to see where the industrial metals, silver here, that did back off pretty sharply on Thursday, Friday. I still think that wants to go up into that 40 handle, but we'll see where that goes. I'm very interested to see where these open with the recent news. They actually dipped when Israel, I believe, invaded. It was I think it was the 13th. Didn't even really close green, so interested to see how silver, platinum, and palladium respond. Platinum and palladium did back off on Friday. Then we have copper here, which was sideways this week, but starting to build a nice bull base here. So if it can break through that, 5 handle, I think this can push back up towards that all-time high. But yeah, very interested to see where this opens tomorrow. We'll see. Again, 5,800 is a big level for the market, and if it can digest that, I think it'll be fine. But anyways, guys, I'll wrap it up here. Again, you guys don't forget to come find Jason on Patreon. Come find me on carnivaltrades.com, and I'll see you guys all next week.